Dude, I'm at this Airbnb with Josiah trying to figure out how everything works, and also how I'm going to be able to say anything without everyone hearing Josiah in the background. Uh,
He can be pretty noisy.
we'll uh, we'll figure it out, dude. It is a heck of a day. It is a heck of a day, but you know what? Coin's still lagging behind quite a bit.
I know we had a nice little pop for a minute there. Pulled
I hit
up.
like what 272 or something. Of
Yep. Right at the open.
course, it's funny. I say it's lagging way behind. It's up 2.8%. I just mean relative to what I expect coin to do, which is be up like 8% when
Right.
we get these pops. It's actually here I am saying lagging way behind. Really, it's right on pace.
71 or 271. Let's see what MicroStrategy's doing. MicroStrategy, same thing. And if you look at like a daily chart, so here's MicroStrategy, all-time highs up here, 545. Let's go to Bitcoin. We're past all-time highs. So let me go back and then actually finish that statement. MicroStrategy is nowhere near all-time highs. Bitcoin, obviously, breaking all-time highs. Woot woot. Anyone here have any exposure to Bitcoin, whether it's through owning actual Bitcoin or the ETF like I have? Or maybe you've got a trade on from the opening playbook. Done quite a few over the last few weeks. Yes, yes, yes. Love it. Also, oh, there you are.
Bitcoin trades and Bitcoin holdings and Solana trades. I'm all over the map here. It has been a good couple weeks.
Oh yeah. NASDAQ leading the markets outside of Bitcoin, of course. Bitcoin, the leader. But the markets were down in the overnight trading session and then popped back up. Jobless claims came in slightly better than expected. Could be the reason for the surge. But like we still have like bonds down. Rate. Did you see the global interest rates yesterday, last night? They all shot up like crazy.
It's interesting. I mentioned this. If you throw up MAGS on your watch list there too, the last couple of days, what we're seeing, which is a flip from like maybe 3 weeks ago. We're now seeing the most concentrated mega caps lead. Mags is up, 1 point whatever, 4 or 5%. Then QQQ right next, moving up 0.8% now, and then SPY kind of bringing up the rear 0.3%, which is really what you want to see in a risk-on, aggressive, bullish market. You want to see exactly that, but that is a shift than what we saw at the beginning of this rally, where the mags were actually kind of lagging behind a lot of those days. Financials is pulling the SPY up above the Qs, and so to me, this is actually a very positive sign. Once again, that we're getting some risk on action in exactly the way that you want to see it, with the mega caps leading. So I'm putting some plays on MAGS. For those of you who don't know, MAGS lets you trade the Mag 7 directly as one ETF. I've traded it quite a bit. It's one that I like. And so it's also, as you can see, way behind all-time highs. I mean, you can see this is what I'm
Mhm.
talking about, the deeper correction and lagging behind that I think now is starting to lead. And so I think we have like a really outsized opportunity right now if we see this squeeze to all-time high. I don't know about you guys, but I don't think it's super likely that the SPY and QQQ are going to rip to all-time highs without Mags also getting to all-time highs, which just is so much more opportunity on MAGS than it is for SPY and QQQ, because I mean they're like within percentage points away from all-time highs, which is Mags has all that
Mhm.
room. So anyway, that's my diatribe to say of like the not macro, but like broad plays. I like mounts. You could do like Grams Elite trades on those, jump trades on those, or just buy straight options because it's relatively cheap. Lots of different ways you could trade that one, but I'm a big fan of playing that up to like the $60 super aggressive.
Yeah, no, that's cool. That's cool. Probably the main reason it's probably lagging behind a little bit is our dear friend Apple just showing no signs of life. It's in its own bear market right now, actually. Funny enough, so the Nasdaq and the S&P just returned to a bull market after that March and April quick bear market, but Apple has not. Our
Dude, I'm
good
still
friend.
stack. I'm still a believer. I'm still stacking trades on Apple every week. Uh, if it makes the move, the very delayed move that I think it'll eventually make, I will be very thankful. But yeah, I mean that's one of the reasons I've been trading mags more lately, is because my dear friend Apple has not performed the way that I'd hoped, and so just moving on to some other things, but still stacking Apple. Was lowered my trade size, but really really need to get rolling here.
Yeah, we got some questions. Why do we think Apple is falling into this slump? For me personally, I know Nate, you've got your own opinions. They just haven't had anything really break through on the AI front so far. I mean, they launched their Siri AI. I don't know if any of you guys have used it, but it's like basically Siri, the same thing in my experience. Um, they just
People
don't, they
still worry
haven't
about
had
the
anything
China
exciting.
stuff too. I think like there's like the China sensitivity on Apple is still kind of
Yep.
a little bit
Yep.
of a wet blanket hanging over it. For me, I'm actually the reason I think Apple's a good value play right now is because I'm optimistic on the AI front.
Right.
Um, I don't think Apple needs to develop anything to still take full advantage of it in the next couple of years. I think when AI continues to develop, whether it's new startup companies, which probably will be, by the way, they're actually doing the R&D and developing it, or it's open AI or anything else. I think people are still going to want to use that AI on an iPhone. And so I think Apple still is in great position in the long term, regardless of kind of how that
Mhm.
R&D and development ends up flowing.
And it's going to be a domino effect. We talked about this a while ago. They had some signs of life back when they started ripping last year. But it's going to be a domino effect once, and this is my opinion, but once they do start having that R&D development or news come out, maybe they bought a company, maybe they're going to implement some sort of new software, it's going to return back to all-time highs very fast. That's my opinion, just like we saw with Microsoft here just over the last couple of weeks. Now we traded this one for 350% gain, so that was pretty awesome. But Apple, I mean, in my opinion, I think you would agree it's just a matter of time. All right, cool. Well, today we're going to jump into some hardcore training, and it's actually not that hardcore. It's pretty easy. I'm going to walk you guys through how I look at momentum in certain stocks. Uh, some of you guys may be familiar with my Newton indicator. Just curious here, who here has the Newton indicator? Go ahead and post in the chat. But what it does is it finds a unique way to quantify momentum. So a lot of times you can look at a stock, you can look at trend lines, you can run those relative strength filters that I've given you here to try and get a good gauge of momentum. But what Newton does specifically, and I've got the lower on here, and specifically I don't have it on the upper today because I'm going to basically show you how to rebuild it a little bit more manual way than Newton. Newton's all automated for you, but basically what we're looking for, we're not looking for a dollar move, we're not looking for a overall trend move. We're just looking for a specific percentage deviation with two EMAs. And we'll talk about that today. So, like, actually, I won't get into this yet. I'll get into this in a second on why this EMA crossover wasn't a buy versus why this one was on Microsoft that ultimately went higher. But it'll be cool. So make sure you have your trading platform up, guys. I'm going to walk you through putting these indicators on your chart, and then what I'm looking for when taking trades as well. Now, before we get there, fun little day today. There's so many coincidences right now, Nate. We've been talking about Bitcoin for a couple of weeks since it was down in like 83K just the other week. Remember, we had the huge drop in the Nasdaq, the S&P. Normally, you would see Bitcoin fall even harder than those. It did not
Yep.
do that. It held up really well. It actually went higher during a lot of those drops, similar to gold. We're seeing it sort of turn into a safe haven type of asset, and we've also see volatility contract. Right? You normally see very usual 3, 4, 5, 8% swings in Bitcoin on any given day. We've been seeing 0.5% chug higher, little sneaky moves higher. Now we found ourselves at all-time highs here on Bitcoin today, and it's a funny that today is the day that we happen to hit new all-time. Well, technically yesterday, but today we're sitting at all-time highs, and it happens to be 15 years ago, the first ever Bitcoin transaction recorded happened. Is anyone familiar with this story? It's quite a story.
I love this story.
This
I mean,
guy
I
here,
feel horrible about the guy, but
yeah, actually, it's funny. He's been interviewed so many times and he's very, very kind about it. He's like, hey, you know, I was a part of history. I'm happy to be a part of history. But here's what happened 15 years ago, Bitcoin wasn't really worth squat, right? It was worth nothing. It was almost like, what is this thing? Is this a joke? Cryptocurrency that doesn't really mean anything to anyone. Well, he was the first ever recorded Bitcoin transaction. He bought these two pizzas that you see here. Those are good looking pizzas. Bought them for 10,000 Bitcoins, which was back then, I don't know, I'm going to estimate 40, $50, maybe less, probably because inflation. 10,000 Bitcoins today. Those two pizzas right there are worth $1 billion. That is crazy. And that just shows you the price appreciation that we've seen in Bitcoin over the last 15 years. And you're right. Nobody thought Bitcoin was any good. I remember actually when I was in high school, I had some friends who were doing Bitcoin mining and I thought it was a joke. I'm like, you guys are wasting your time. You don't know what you're doing. Turns out they're the geniuses. They got the last laugh in that one. But it really, really has become a powerhouse asset. Uh, but we haven't really seen that in previous cycles. It has always been a speculative trade, like a gamble, some would call it, or a lottery ticket. This year, we are seeing Wall Street go in, institutions go in. We're seeing governments go in, right? Did anyone see the news from Texas yesterday? Texas just established their strategic Bitcoin reserve. Obviously, the US did that. A lot of countries are doing that right now. So it's going from this, kind of what is this thing to a real diversification of assets here, a digital gold, if you will. So there's a fun fact for you today to kick off. This was 15 years ago today. We just happen to be at all-time highs again right now.
You must be buying some bougie pizzas. For two pizzas to be $50. You must be like a high-end pizza guy. I was thinking,
It's expensive down here in
20,
Florida.
I was thinking 25.
There you go,
But
25 bucks.
Adam Mowry's was one of those gamer guys who like I forget exactly what the game was or whatever, but they use Bitcoin like as the currency in the video game he was saying. And so like part of the game was he mined it and he said he had like I don't know 30 or 40 Bitcoin like on this game or whatever that just is on some old laptop that he gave away or donated,
Mm.
10 years ago and obviously now really wishes he had that laptop.
Yeah, that hurts. That's a lot. Wow.
Just trying to check in.
Well, with that said, I'm going to jump over here to the full training. Again, we're going to talk about how to quantify momentum in stocks. Make sure you have your trading platform open, your charting platform, whatever you use. I'll walk through the indicators, how they work, and how I look at it as well. And we'll do some trades. So over the last year or so, I've built out and live traded with a new tool designed to quantify momentum in a way we've never seen before. You guys have probably heard me talk about Newton in the past, right? The red candles mean we're short or out. Green means we're long. And this tool has single-handedly helped us get in early on GEV, which I need to update this chart. I wish it was 280 right now. GEV right now is at 458. So almost doubled since I took this screenshot. Oklo, which is one of a stock I really like right now, actually. Very volatile. Be careful. This one's also like doubled since this screenshot. Gold's rally. Gold is up another almost what $800 since this. But not only has it handpicked some of the incredibly powerful investments, but it also has found us good swing trades like HWM and the on the clock stocks program. Bitcoin move in the perfect Bitcoin trade. We've used it quite a lot there. Plus, it works for day trades too. We've done some day trades. Kava, Nvidia, Carvana. Now Kava. I need to update this. Not one of my favorite stocks right now. Told you guys that I sold it about 100 and it's been in a downtrend. Boy, oh boy, Kava. MicroStrategy and many, many more. So today I'm going to walk you through how it works, why it works, and when to apply it to your trading. Plus, I'll give you some trades to take today as well. Now, I didn't pull up any trades yet. We're going to go through it live together. So let's start with the how it works. And for this section, I'm going to be talking about swing trading specifically. Now, it works for long-term investing. It works for day trading. I primarily use it for swing trading. So it works on any time frame, this momentum pattern that I'm going to show you. We're going to put on your charts today. But I use it on one day, but it works on 2 day, 1 week, 1 month, et cetera, et cetera. But it uses two EMAs as the basis. So this is our underlying formula for what's going on. We're using a fast EMA. It's a 5-day EMA and a slow EMA, which is a 16 EMA. Now here's how it looks on a chart, right? It's a daily chart. This blue line represents the 5-day EMA. This yellow line represents the 16-day EMA. So let's all go ahead and pull up our platforms here. Let me just clear my indicators out. And I'm going to use Thinkorswim today. Whoa, where'd my chart go? But you should be able to get these indicators on any basic charting platform. So what I'm going to do here, and obviously I'm not going to give you Newton. I can't do that. But I'm going to show you how it works so you can try and get some opportunities from it, even if you don't have it. What I'm going to do here is I'm going to go ahead, and I went a little quick there. I'm going to come up here to this little beaker bottle. We're doing some science class today. I'm going to click that. I'm just going to type in EXP for exponential. So I'm going to give you guys a minute if you're following along. If you're not, don't worry. This is recorded. You can go back and check this out later. Now, this third one down here, moving average exponential, that is our EMA. I don't know why they wrote it like that, but it's EMA, exponential moving average. I'm going to add one to the chart, and then I'm going to add it again. So what we're going to do now that we have two EMAs added, right? Now I'm going to set my settings. What were the numbers there? The fast one was a 5, and the slower one was 16. So let's hit this little gear here and Thinkorswim to adjust the fast one. So here you can see the length. So right now it's looking over the last 9 days for an exponential moving average. I'm going to drop it to 5. What this does is it makes it a little bit quicker. It adjusts to price a little faster. So the longer this is or the bigger this number, the more data it's looking back. So if a stock has been going up and to the right, like Bitcoin for say, and you have 100 here, it's going to be much slower moving to catch up versus the shorter we make it, the more timely it's going to be. So I've set this to 5. I'm going to hit OK. And then now that we've got our first one set, let's set the slower one. Go ahead, click that gear over here, and I'm going to change this to 16 day. This is going to give us more of our swing trend. And I'm just going to change the color down here to yellow so I can distinguish between the two. So this other one was blue, color's blue, so I know the blue is the fast one. And then the slower one is yellow. Of course, use whatever color you like. Now I'm going to apply that to our charts. So here we have the basics for our trade, and let me show you how it works. Here, fun fact, it's the same case for the weekly charts, just the 5 and 16. So if you're using it on a weekly chart, you can do that too. So the 5 and 16 combo is the backbone for our momentum calculations because the 5 is greater than the 16 on a chart. This is important. So just because the 5-day moving average is above the 16-day moving average right here, like you see, blue crossed above yellow, that does not mean we have an entry though. A lot of people trade it this way, and I think that's a big mistake. You can get caught way off guard in downtrends. We don't just look for a crossover. We want to quantify it, and we want to quantify it for each individual stock, ideally automatically, which is what Newton does. So the secret sauce is in taking the difference of the two EMAs. So in order to get a higher than average momentum reading, we need the 5-day above the 16-day. Yes, we do need that crossover, but we also need an expansion of at least 1% or greater to see a higher than average momentum. So you want to see it 1% or greater. RJ says, I moved too fast. Is this recorded? Yes, it is recorded. I apologize for moving too fast. That's one of my faults out here. And I get so excited. I start talking fast and start rolling. So let me say this again. Just because it's crossed over doesn't mean it's a buy. We want to see an expansion of at least 1%, which didn't happen here. I'll show you in a second, but it did happen here. So what does that mean? A lot of people will look at the EMA crossover and say, well, I want to see at least $1 over the current price. I want to see the 5-day EMA a buck above the 16-day EMA. That's a big mistake. Big mistake. Why is that a big mistake? Well, for a stock like Microsoft, which is, let's call it $500, $1 move is barely even a budge higher. It's a 0.2% move higher. That's $1 over $500. And I'm rounding up here for simplicity. Versus, let's say, a stock like, I don't know, let's find Bitcoin right now. The Bitcoin ETF, let's just call it $50 again for simplicity's sake. I know it's not. But a $1 move over $50 is actually a 2% increase. So do you see the difference there? A dollar move for Microsoft is not very much at all, versus a dollar move for IBIT is a pretty big move. And the cheaper a stock gets, the bigger that number gets. So we do not want to use a dollar difference. We want to use a percentage difference between the two. So in essence, you would divide. So like if we're looking at the two current EMAs right now on Bitcoin, you would divide the blue number by the yellow number. So if I were to do that manually right now, We'd have 61.33 divided by 58.35. Right now we have a 5% expansion. Does everyone see how I did that? Not Dan, not seeing my screen. There may be a button you have to click. So we want to see at least a 1% expansion. So let's go back here, for example. I'm going to estimate here and see if we had a 1% expansion here. 47.49 is the blue line, and 47.34 is the yellow line. That is not a 1% expansion. That's a 0.3% expansion. So just because the blue line is above doesn't mean it's a buy. Now here it would have worked out because the next day you would have gotten entry or the following day. But there are times like here where you would not have wanted to enter because even though it's above, it was not up enough. The momentum wasn't increasing at the rate we want to see. Dave, if the lines are getting farther apart, does that equal expansion? Yes, it does equal expansion. So let me just show you here on Bitcoin again. See how this is running away from the yellow line? They're separating. That's an expansion to the upside. And we don't want to enter until we have at least a 1% expansion. It kind of confirms the move that it's making a parabolic move. I shouldn't even use the word parabolic, but just a high momentum move to the upside. Doralee, can we calculate this again, please? Yeah. What you would do, let's type in any ticker. What ticker do we want? Let's look at HWM because I know it's going to be a good one. So HWM right now, if I'm looking at my 5-day EMA and my 16-day EMA, 163.06. I'm going to divide it by 156.82. Right now, we have a 3.9% expansion. That's good enough for a high momentum trade. We've got some chats here. Someone likes 3% expansion. That's great. That would just be an even greater expansion, maybe a more confirmed trend. Now, this 1% rule, I did back test on probably 50, 100 stocks on the daily time frame, and they all, well, I shouldn't say every single one, but most of them turned really great returns with win rates. The average win rate is probably about 75%, with some of them in the 90s. So that's why I like this 1% rule. It's a good common rule for most like S&P stocks, large cap stocks. You know, if you're going penny stocks, you might want to just stick to day trading those. Actually, Newton's really good at that as well. But this is your general rule, 1% expansion on the 15-day and 16-day EMA. So with Newton, I did put a lower study in where you can actually see that percentage number automatically calculated. So I'm going to add that in. We're not going to walk through how to calculate that today. One, we don't have time. Two, I don't really want to give it away. But here you can see the number. So here, this yellow, it was above, 5-day was above the 16-day, but it was not a 1% expansion yet. If you look at this number over here, that'll tell you the percentage. 0.25% expansion versus the next day, see how it starts moving away? The next day, 1.5% expansion. That's a good thing. That's when we can enter. So that's how that lower study works. And again, the green, it's just coded. Like the candles are coded so that if it's green, it means it's above 1%. If it's red, it's below 0%, or the 5-day EMA is below the 16-day EMA. If it's yellow, that means the 5-day EMA is above the 16-day EMA. However, we don't have a greater than 1% expansion. Funny enough, here's the next slide for you. So if the 5-day EMA is below the 16-day EMA, that's lower than average momentum. Typically, you'll see stocks going down. You can short it if it's a bad stock. That's what I would do. If it's a good stock, that could be a good profit-taking opportunity, or at least a risk management point where if you own the stock, you might take some, book that and then go find a new one that's increasing in momentum. If we get the yellow, that's the 5-day EMA above 16-day EMA, but it's less than 1% expansion. So think of it like you're on deck. We're just waiting, nothing to do yet. Let's see what happens next. And then when we do get that 5 over the 16 and greater than 1% expansion, that's when we like to go long on a stock. And of course, if you have Newton, the candlesticks automatically correlate. So what's going on here? Well, Newton is not only calculating a short-term trend with the EMAs crossing over, but also we're looking for the acceleration of that move. So I showed you the very basics. You put the 5 and 16 on a chart. That's going to give you the short-term trend, but that's not the important part to me. The important is the acceleration, or like the expansion that I've been showing you. So for example, when it first flips from red to yellow to green, or when we go from negative to neutral to above 1%, and we get that 1% reading, that's an above average momentum play, meaning it's expanding faster than normal. And then you can see here the acceleration continues to the next candle and the next and the next. And that's exactly what we want to see. We want to see this number, the percentage of expansion, just increasing as we're in the trade. Now, notice how here the stock exploded accordingly. So you can think of it like this. Think about an airplane as it's taking flight. In the beginning, right? You're on the tarmac waiting for takeoff. No momentum. That's when the stock's momentum is negative or neutral overall. You don't really want to be long that stock because it's not moving. Not a time you want to own the stock. But then the engines start roaring, plane starts gaining steam, like when the EMA, when it comes up and it crosses over for the first time. And then once we make that 1% expansion, once we start getting that lift, that's when we want to enter. After that, ideally, the plane keeps climbing. It goes faster and faster as we get that expansion off the ground. And that's when we get to ride along, as long as the stock is accelerating at above average momentum. Yes, you would divide the 5 by the 16. That is correct. And then as the plane starts slowing down, getting ready for landing, we look to take our profits, right? So we were playing. Here's the ground. It's my best version. Here, not moving, no momentum, don't enter. We start going, we start getting that expansion, 1%. We're in, plane's going.